Welcome back to another Red Day in the market. We are going to talk about the market. We're going to talk about what the heck is going on. But first, I do want to mention that Jack's birthday is on August 31st, and you can now use coupon code Jack's birthday. And that code, pricing will expire on his birthday, or when his birthday is done. His birthday is August 31st, so check out that coupon code link down below. Okay, folks, let's get right into what the heck is going on again. So lately I've gotten into this habit of just starting my day. It's almost like an easy thing to do. The first thing when you sort of wake up, if you're interested in it. Maybe it's kind of sad that it's the first thing you do when you wake up, but I just like looking at the indices right now on cnbc.com when I start off, mostly because they've just been record high after record high after record high. Now we've got CNBC running headlines that essentially these for the Dow and the S&P, this is the worst week since June, is what they're saying for the Dow and S&P 500, which honestly is like still not that big of a deal. They're still doing very well. We still haven't fallen 5%. We got like these nominal little declines of like 0.8, or we had 1% earlier. There's still pretty nominal declines. Treasury yield still sitting around that 1.24. Oil now at 62.43. This has been pretty steadily heading down. NASDAQ up a tiny bit. Be interested though. Let's see if we can see the Russell. Yeah, see, the Russell's actually doing the worst, and the volatility index is down. One of the reasons you get the Russell doing so poorly is, headline FUD. Take a look at your headline FUD today. Not a surprise that this is the Jeremy, I'll talk to you. I see you. We have more fear, uncertainty, and doubt. Again, headline FUD coming out from the news medias, which does make sense because problems are getting worse, specifically with our ICU capacity. That's just a crisis right now, especially in a lot of the states where specifically COVID is taking over. So let's take a brief little look here at some of the fear here. Take a look and see here. Let's see here. We've got the worst of the COVID pandemic maybe receding into the rearview mirror, but office workers are a little closer to returning to their desks full time. The spread of the Delta variant has forced many U.S. employers that had been hoping to get staff back to their desks by Labor Day to delay those plans until October or even next year. So you've got sort of this delay in return to work. And I think as that sort of fear continues, or rather that delay continues to spread, you really spread more fear. And no kidding here. Question is for businesses and landlords, how quickly will the picture change? And the longer the process takes, the likelier the former outcomes. Okay, well, I haven't read this one. Let's see here. But that's okay. But anyway, surging COVID cases in New York City, along with the rest of the U.S. city, has sent a chill through the Apple's reopening. It's not Apple the store; it's New York. Okay, so this is more maybe New York specific here and office space specific. It makes sense. Bloomberg City Lab. But anyway, COVID is making the rounds again as some of the headline news. Of course, we've got Taliban here. We got to talk about the futures, but COVID again. Let's take a look at COVID cases. Quick little Google here of COVID cases. And what we're trying to see is that the spiking or the trend in that day-to-day case count. So let's go to U.S. total here, and let's zoom into the last couple of weeks here. Look at that. So still elevated, sitting at about 159,000. It does look like we have this sort of trend of inside the week being mixed. So you kind of see this mixed data inside the week. But usually Saturday is the worst report, or has been the worst report of each week. This was a disaster. The fact that on Tuesday we had the worst report this week. And then you're always followed by these two low reports from the weekends. So will be really interesting to see tomorrow. Are we going to see a lower case report or a higher case report? Since we're in this trend of seeing higher cases coming in on the Saturday release. So pay attention to that. Let's take a look at some individual stocks. We'll see if Macy's is doing better. Yeah, there's talk about COVID has peaked here, or whatever. I don't know. I mean, look at that's what folks said about the United Kingdom. COVID cases, United Kingdom, and they're like, oh, we'll be fine. There's no fear to be had about COVID. We'll be fine because cases peaked in the United Kingdom and then went down. That's great, but look at where they are compared to where they were. And now it's still trending up. In fact, let's go to the last 2 weeks here. See, and they don't have that weird like fall in how they're processing tests, but whatever. That's been pretty normal in the U.S. So that's why they started using the 7-day average too. But anyway, yeah, I mean, look, this is not so good for the. Looks like a little lower than where we were at the beginning, 30 days ago here. But then again, that's depicted in this chart right here. We see 30 days ago, sort of this end of this decline here, but now we're starting to see a little ramping up again. Not so great. This is what we're trying to avoid. So let's see, what was it? Somebody said, oops, I'm not sure how I ended up at GitHub. There we go. Somebody mentioned Missouri. So let's go to the United States, just as an example. All right, United States. Here we go. And I don't know, just type in Missouri. Yeah, look at that. So here you've got a little bit of sort of almost that UK kind of peak happening. And I think it's worth watching this to see how far is this going to come down? When do we start bouncing up again? But it's very interesting. Good mention. Okay, let's go ahead and go to the individual sticks here, see what kind of potential discounts we have today. What's going crazy on the upside? Look at that. Emrin coming back, 18%. Cully, pretty small cap stock. Big old momentum in this one. I mean, this one's got a big personality. Naked up 11.5%. Canadian Solar coming back, 4.38%. Darn it. I was looking at that one yesterday. I'm like, this is so juicy. I want to buy it. But it was also like 2 minutes before market close. Take a look at this. It's just worth, if you haven't seen this yet, take a look at this. Tesla's bot.
It's basically going to start with just dealing with work that is boring, repetitive, and dangerous. Basically, what is the work that people would least like to do?
The Tesla robot is called Optimus, at least right now. It's called Optimus. They say it's going to be ready next year. I think a lot of people are skeptical that this is going to be ready and even in a prototype form next year. But that is what Elon Musk was talking about. And we should point out, guys, while this is getting plenty of attention, that is exactly what Tesla was aiming for. At the end of the presentation where they talked about the Tesla robot, I mean, they made it very clear on the stream. Come work at Tesla AI. And they're looking for that artificial intelligence talent. And that's really what this was, a big recruiting pitch last night at the end of the update on artificial intelligence and what they're doing to improve full self-driving technology.
There you go. Okay, wow. A little bit of a slam there on Tesla, suggesting that maybe this is not as serious and that this is just a way to get engineers. But hey, you know what? It doesn't just have to be cars that you're making at Tesla, apparently, right? But anyway, 1.4% for Tesla to the upside right now. We have Arcimoto 3.41%, and we've got Coinbase. Coinbase coming up a little bit with Robinhood. Interesting to see. And here's we've got SoFi here as well, about active 14. Interesting to see what's going on with crypto. So let's see, take a peek here. Yesterday we were on a little bit of an up run. Yeah, there we go. So we had our run up. This is the hour chart here. You can see we fell just below 44,000 yesterday and are back to about 47,400 now. One that has been killing it is one that we've been buying a lot of, and that's been Cardano. It just moved another 50 cents, which for a $2 stock is just insane. Well, security or crypto asset. But whew, that's nice. In fact, I want to say that's potentially all-time highs. Pretty sure it actually is. Let's do this. We can go to CoinMarketCap here. See it here. And then we'll look at some headlines. ADA. There we go. So let's zoom out on the chart here. Let's trade view and let's go on. Well, I could just do this. There you go. Keep my life easy. Yep, look at that. All-time highs. Very interesting. SoFi insiders buy. Makes sense to me. The thing fell through support. All right. So let's see what else we have here. This is not. I mean, there's red in the indices, but not a lot of pain today. So it's more of just a small little red slipping here. Let's go ahead and take a peek at some of the headlines. Clove is the number one trending in stock trades with a lot of bearish comments. So sucks for Clove. Let's see here. Clove. It's up 1.85%. It goes to show that, stock twits isn't always going to be your answer. All right, let's see what we have. 5 things it doesn't matter. Okay. Let's see here. COVID deaths hit February levels. We saw that yesterday. OnlyFans banning sexually explicit content. Biggest tax hike on wealthy since '93. Bogged down in Congress. Okay, let's go to Financial Times. All right, let's try over here. Tech sell-off pushes Hong Kong stocks into bear market. Yeah, that's not a surprise. Shares in Alibaba and that drop. Fears of crackdown. Let's see here. Let's type in Baba. Alibaba, yet ironically up 2.65%. But yeah, I mean, you could see this ugly just bleed out here. I mean, look at that extension, that bleed here. It's rough. Ugh. I kind of thought that as well. I'm like, doesn't that like end the purpose of OnlyFans? I don't know. I thought that was kind of the reputation they had built. But it's like, are they trying to turn it into like TikTok? I don't know. All right, so let's see here. Yeah, OnlyFans is making a headline news everywhere. Okay. Let's see. Deaths reported as Taliban faces growing dissent. So people are not happy. Lots of news. Economist trim forecast. That's his old news. Golly. I don't have a lot of news. Tesla's like the biggest news right now. Bacala and Taliban. Okay. Well, not a lot of news. We're gonna have to go hunting. They make it a little harder then. With Journal. Let's go to the Wall Street Journal. China passes one of the world's strictest data privacy laws. Okay. Top SPAC merger collapses. Oh, this is interesting. Let's take a look at this. SPACs have been so out, by the way. Like anytime somebody's like, Kevin, should we do a SPAC or like, should we invest in a SPAC? I'm like, no, not even close. And it's been very rough for SPACs lately. Just, since February, it's just been downhill. I think a lot of people, I think SPACs are easy targets for getting shorted. Let's see the talk in Beijing and then we'll come back.
Take up to 2 weeks to clear the backlog of container ships at Ningbo Port. They say that they expect that the closed terminal will be partially reopened next Tuesday and be fully operational by September 1st, assuming that there are no more cases there. Now, Beijing's zero tolerance policy towards COVID might claim the Shanghai airport next. That is what people here are watching. There were 2 workers confirmed today with the Delta variant. 300 people have been quarantined, and certain residential and hotels have gone into semi-lockdown. They've been designated middle risk. And this all comes as manufacturers not only are trying to ship out goods by boat, but also by plane. Now, the authorities here have also been imposing restrictions on other areas of the economy. The data privacy law just was passed today by lawmakers. This is the Personal Information Protection Law. It focuses on protecting user data. It's going to go into effect on November 1st. And now companies are going to be required to collect the minimum amount of data for a service, obtain consent for sensitive information, offer easy opt-out options for consumers, and get government approval to transfer data overseas. And now, separate to that, the cyber watchdog today unveiled tighter restrictions for data collection for the car industry as well. And again, requiring that data is stored locally. And if not, the approval needs to come to transfer data overseas from the cyber watchdog or other government authorities.
Yet ironically, NEO's up.
The concern, of course, is that these new requirements is just going to make it much more difficult for Chinese companies as well as other companies that operate here to be able to expand and make profits because a lot of the companies have been engaging in using that information in order to personalize services. Now, in addition to data privacy, another big topic here has been the anti-sanctions law. This is what the lawmakers have been discussing, potentially extending that law, which has been passed here in mainland China to.
All right, I'm going to pull off this mostly because I want to specifically talk now about something that's getting worse than we even thought yesterday based on news that we were covering. So, excuse me. Well, so, all right, here we go. So yesterday we talked about how the LA Times was reporting certain container prices were going up to $12,500, which was really interesting because that's insanely high for port congestion, basically a reaction to port congestion. Container suppliers are charging way more money to now process containers through these ports. And what I thought was, after I made this video yesterday, a good friend who does wholesaling in China, his company's Pouch Depot, so shout out to him. But anyway, he sent me an invoice for a container. Take a look at this, folks. This is an invoice for a container in China, and this is over ocean freight, $15,300 for the container. Look at this. Port congestion fee twice. We've only put a few $100s in here. But then when you put in all this stuff, trucking charge, fuel charge, pier pass, whatever, you end up with this grand total of $24,000 to get a container to America. Now, in fairness, $7,300 of this on this invoice is for a duty. So this is taxing, right? This is the tax right here, that's $7,000. But really, I mean, you're somewhere around $15,000 to $16,000 for just getting a container here in recent days. Now, let's actually look at the date. This is as of, here we go, invoice date August 19th. August 19th invoice date. $15,300 plus some of these port congestion fees just for a container that used to cost somewhere around $1,500 to $3,000. Now take a look at this though. This is $15,300 to about $16,000. After I got this, CNBC ran an article right here. Take a look at this. Container shipping rates between US and China exceeding $20,000. Hitting a record. Now, why does this matter? It matters because of an impact, obviously, to any company that's importing a lot of goods from China, which 40% of goods are imported from China around the world. 40% of products are created essentially in China and then exported. And a substantial amount of chips, supply components for other things that also use chips. I mean, it's bad. Paying $20,000 for a container is bad. There's no way prices can't go up, because otherwise companies just start losing money at these rates. But take a look at this. Container shipping rates from China to the US have scaled fresh highs now to or above $20,000 per 40-foot box. The acceleration in Delta and several countries has slowed global container turnaround. That is actually counties in China. There we go. Container shipping rates from China to the U.S. have seen peak over 20K. Acceleration in COVID. Typhoons off China's busy southern coast in late July and this week have also contributed to the crisis, gripping the world's most important method for moving everything from gym equipment to furniture and car parts and electronics. These factors have turned global shipping containers into a highly disputed, undersupplied seller's market, in which shipping companies can charge 4 to 10 times the normal rates to essentially move cargo. Spot price for a container climbed over 500% from a year ago to $20,804 this week, freight tracking firm Freightos says. This compares to just under $11,000 on July 27th. So about 3 weeks ago, you're at $11,000 for a container. Now you're at $20,800. I mean, this is pretty insane. Not good. Not good for the chip shortage or supply shortages. And the issue is we're really almost not seeing it let up. It just continues to get worse. As they say here, the rate surge is the latest reflection of disruptions since COVID-19 slammed the brakes on the economy in early 2020. Every time you think it's come to an equilibrium, something happens that allows shipping lines to increase the price. More excuses for inflation, right? There are new orders for shipping capacity equal to almost 20% of existing capacity, but they will only come online in 2023. So we will not see any serious increase in supply for 2 years. Yikes. That's intense. Hey, look, that's me. But anyway, that's crazy. The bump in 2023, and that's in 2023. That doesn't mean like by 2023. Or, by 2023 would be like, by January 2023. In 2023 is like, cool, we do a few more containers in January, and then hopefully by December of 2023, we got more containers. That's crazy. That is incredible. So, yikes. That's all I want to say. Yikes about containers and inflation woes. This is going to hurt more longer. All right, what other headlines do we have here? Coinbase buying something. 500 million in crypto, investing future profits into a crypto portfolio. Cool, Coinbase. You take that cash and go buy crypto. Disney's developing an exoskeleton that could bring the Hulk into its theme parks. Nice. The Hulk. They have the Incredible Hulk Islands of Adventure in Florida. Pretty sure they do. But all right, let's see here. What else? Let's go to Bloomberg. School mask mandates clear early hurdles in U.S. Battles. We've got it's the Tesla AI. We talked a little bit about that. Yeah, this is so weird. I did a video on Tina last week. Like literally, I think it was in a car. It was last Friday in a car. Oh, which by the way, if you want some free merch and you want to meet us, make sure to go on go to either meetkevin.com or go to the Meet Kevin app. I'm going to be handing out and distributing some free merch, and we can do pictures or whatever tonight, tomorrow, Sunday. So open to chatting. Yeah, I think it'll be really fun. But I want to talk about Tina in just a moment. But take a look at this. This is the Meet Kevin app. Here's some of the locations. If you can, just go on meetkevin.com and RSVP for some of these locations. Los Angeles, San Francisco, Sacramento, Fresno, Bakersfield, Venice, Newport, San Diego. If you're in these locations, check it out. Check it out so we can meet you and get you some free merch. I think that'll be fun for the campaign. We get to meet up. So it's sort of a little mini rally and answer questions or whatever. Nothing too serious or too organized. But yeah, do RSVP so we know how much to bring. Okay, so then we have, let's see here. We'll come back to Tina in just a moment. We do have the market opening in 30 seconds. So let's go ahead and listen in over here. And of course, remember, if you want a free stock, go to metkevin.com/public. You get a totally free stock when you go to metkevin.com/public, download the app and sign up. metkevin.com/public. Public does not buy or sell your information. And You can socially share your trades. You can also follow me there at me, Kevin. All right, let's listen in.
Yeah, wide-ranging, fascinating interview. I have to say I was a little jealous. I mean, you guys covered a lot. I thought her comments on cryptocurrency and the flight to that as a safe haven and the impact of China was fascinating as well.
Obviously not consensus, but Kathy rarely worries about that. There's the opening bell.
All right, let's see it.
FPPC real-time exchange. The big board, it's financial data.
There you go.
Ooh, celebrating its 25th
less red.
anniversary.
It's almost, what is that?
Those guys heavily. Thanks for everything you do.
55-45 today. 55% red, maybe 45 non. That's not as terrible. Let's see how things are rotating into the open here. So let's go ahead and take a peek here. MRIN, it's got its momentum move. HelloFresh opened up nicely. Cardano's at 254. The thing just keeps running. It's really incredible. Hut 8 mining at $4.21. We've got DD 389 cents, Alibaba. Okay, so you got some things moving here. Interesting, because today there was some negative news about Alibaba and Chinese car makers. It almost makes you wonder, though, if potentially more regulation ended up coming through, almost made potentially investors in Chinese stocks wonder, like, okay, is this the end? Is it over now? So we'll see. Okay, Hut 8 mining, yep, coming up nicely here after the crypto run is back. Snowflake's falling nicely here. Snowflake coming down about 4.9%, suffering a little bit more into the open as well. We have, looking for some other pain here, Simon Property Group, Intel, Tootsie Roll, Marriott International, Starbucks, Goldman Sachs, Google. Kind of just mixed, like nothing screaming big mover here. Oh, wow, Macy's is still up 2.3%. Tesla's up 2%. Shocked Tesla's up after AI day, honestly. Usually you got, but I think maybe because they just indicated that they just really opened up a whole new potential market that maybe Wall Street wasn't even prepared for, which makes sense. I mean, it's a humanoid robot. All right, let's talk a little about Tina. All right, all right. So NV taking a flat line, doesn't seem to bounce. Nothing seems to bounce right now. Things don't like bouncing. Oh yeah. It's just the kind of market we're in. It's just not a very bouncy market. It's a very like sideways trading market, with the exception of indices. Kind of been sideways trading up. So I guess that's not really sideways trading. It's trading up slowly. Really an incredible March, and this has been a period of diversity. But anyway, let's talk about Tina. So last Friday, when I was heading to fly out, we had a video that I filmed in the back of an Uber, mentioning that I wonder if we're in the situation of Tina. There is no alternative to stocks. Like, even though there is so much uncertainty that we have fears over inflation, supply chain shortages, Delta shutdowns, whatever, where else are we going to put our money? And I've talked about RCC, right? Real estate, crypto, cash, but that's only a tool for potentially trying to time an entry point into the market. And ultimately, the idea is to still get into the market. So it makes you wonder, like, does that mean just keep life simple and invest now? Or does that mean wait for that dip and then buy? But either way, is there really an alternative to stocks? Of course, I personally believe, leveraging into real estate, if your net worth is under $500,000, great idea. In fact, if you want to learn more about building your wealth with leveraging into real estate in a safe way, or you want to learn more about stocks and psychology of money, use the coupon code link down below, Jack's birthday. Jack's birthday is August 31st, and so we'll have another pricing increase after that. After all, container prices are going up so much, and it's a lot of shipping that has to be done. Not by me, but anyway. So take a look at that coupon code. That price will be going up again after Jack's birthday. But let's take a look at Tina a little bit more. U.S. stock funds enjoyed their largest inflows in 9 weeks, according to Bank of America strategists. means there's really support for this idea of there is no alternative. Equity funds attracted $12.8 billion in the 7 days ending August 18th. It's almost like people are buying the dip. Yeah, it's like, hey, we've had a red week, first time in a while. Let's go in and let's at least buy some. It's kind of cool. B of A data was collected before the Fed indicated it could potentially start its taper this year, but we already knew that. Investors have zero fear of central banks, they wrote. Global central banks have spent $834 million every hour buying bonds since COVID. Wow, that's a good reference. Little wonder why everyone believes there is no alternative to buy the dip. That's great. It's what the back of my shirt says. Back of the rocket to the moon shirt says, buy the dip. But anyway, while the risks of the global economic recovery are mounting, money managers in search of returns are sticking to equities. So, yeah, well, I mean, it makes sense. Various different ETFs, exchange traded funds. Large caps were in vogue, receiving 14 billion of inflows this week, while investors pulled money out of small caps and growth. The higher risk, we're seeing that continued rotation away from higher risk, higher valuation. These are the stocks that are just getting hit. We've got bond funds were also in favor, receiving 12.6 billion. Of those investment grade bonds netted the largest amount, 7.8 billion. I just don't understand why so much money flows into bonds. But anyway, yeah, look, Tina, we talked about it last week. Now Bloomberg's copying us, and it's clearly a sign that we were right. All right, so that's on Tina. Let's go ahead and jump back. See what else we have here. All right, we've got Snowflake. Well, let's see what happened to Snowflake, because Snowflake being down 6.92% makes me wonder if they just reported Snow. I thought they reported already last week or something like that. All right, so day off interviews. Oh my gosh, yeah, no report. Snowflake, no, just some opinion pieces that have been circulating. But yeah, in terms of interviews, we've got I actually got quite a few today. First one's at 11, but then 3 more after that. Yikes. Okay, so let's see. Snowflake now down 7%. Certainly a higher valuation play. It's going to be a little time until they're profitable. You got Bill Ackman's SPAC right here, which actually has a $20 par value, is now selling under $20. Ooh, PSTH. This is one a lot of folks have been really excited about. Bill Ackman. Until, of course, he made his pick. I think when he made his pick, people were a lot less excited. I think folks were waiting for like a new electric vehicle company or something like really super sexy for the market. The market didn't really like the music pick. But anyway, Beachbody going down about 2.35%. Ford Motor 0.51%. Starbucks 0.35%. Domino's EXP about a quarter to the downside. Not massive moves here. Again, with the exception of Cardano, which is showing some massive moves. I like it. Hut 8 Mining, 6.56%. Hive Digital, DD, 23 million. Okay. Macy's up again, 3%. Tesla now up 2.2%. Incredible. All right. So let's listen into CNBC for a moment. NASDAQ on its worst week since.
Pretty sizable move for this blue chip company. You have all the uncertainty around the commercial business, which is the bigger business and tends to be the business that moves the stock. But then on the defense and space side, you have had these issues around the Starliner capsule, which competes with SpaceX under the NASA Commercial Crew Program, with the company coming out finally late last week, about a week ago, and saying, we need to do more work. There's issues with this propulsion system, which is made by Aerojet.
All right, we're going to pull off this a little bit. Let's go ahead and see if we can find some other headlines. So I'm going to go to Bloomberg for a moment, see what kind of top news we can find in Bloomberg. Crypto bull run is still in play. Absolutely. Talked about that, especially with the lack of debt we're seeing. Okay, tech stocks drive, let's see, gains today. Dollar climbs. Yeah, I don't know about that. Market's a little more mixed. Okay, let's see. We've got promising infrastructure plays, hide in plain sight. That's an interesting idea. I mean, yeah, maybe you could play some infrastructure after Joe Biden's plans coming through here. Okay. Let's go to. Let's try this. Let's just go to Google News because we have not actually seen a lot of news today. It's been a light news day so far. So, Foot Locker shares, nice. Toyota RAV4, limited supply. Facebook with the antitrust suit. Reflation trade is fading. Well, gosh, the reflation trade has faded. Let's go ahead and listen to what they're saying. So small caps struggle. Dollar reached a 9-month high. VIX measured a 40% jump this week. And there are 3 factors contributing to why he believes we're at the end of the reflation trade. First is the Fed tapering. Another is China's restriction of domestic activities, including credit controls. And finally, Delta. Yeah, we know. We know Delta's hanging out. Let's go to Barron's. Delta something else. Low volume, just enough to hit green. Fake bull on a common red. Let's see here. Let's see how green did we hit. Barely. Actually, yeah, the indices are up with the exception of the Russell. So the fall has really started slowing, which is nice to see going into Friday. And that's interesting. Barron's running a piece about how big tech won't be held down. Tesla AI Day was weird. Its stock is rising anyway. Okay. So let's take a look at this. Hold on. Barron's just came out to report that Cathie Wood is saying that the market couldn't be further away from a bubble. Let's take a look at this. There's a growing sense of unease emanating from equity markets, so from stocks in recent periods of times here. However, star investor Cathie Wood, who runs ARK, says there's no reason to fear the market is becoming too bubblicious. They wrote that. I don't think we're in a bubble, which is what I think many bears think we are. Ooh, we're in a bubble. Short everything. Her comments come amid intensifying worries about the possible slowdown in economic growth in Delta as others are gaining momentum. Investors have been wringing their hands over the prospects of a Fed Reserve scale back. Yeah, they're all pointing the same thing. It's Delta, it's the taper, it's China. Delta, taper, China. It sounds like it's like a code word. Delta, taper, China. Oh no, that's a code word for why ARK is down. All right, that's not that exciting. What do you got over here? CNBC, you talk.
That are sensitive to the economy, like energy stocks, industrial stocks, material stocks, consumer discretionary stocks have been under some pressure recently, so a little more exaggerated. Tech tends to be flattish. That's exactly happening.
This is a really good point. Not surprised she believes there's no bubble, essentially. Her funds are at the highest risk of a bubble burst. Also true.
Staples also are up on the month. So in one sense, very typical, but the numbers are a little more exaggerated. If you want some sense of how the second half might be different than the first half, look at Ross Stores. Now, they had a very decent number. I don't want to concentrate on their backward-looking comments. I just want to look at the shocking guidance here because the street's kind of scratching its head about this. 61 to 69 is the third quarter guidance. If you don't know where it's at, the consensus was 93. This is pretty amazing lower guidance here. And compared to Q3 2020 and Q2 2019, 2019 is what you want to use. That's the metric, $1.03, and they're talking about 61 to 69. So the bottom line here is the first.
All right, let's go ahead and play like puts or looking and explore here. So Hut 8 and Cardano just absolutely killing it right now with this sort of resurgence here in crypto, which makes a lot of sense. Nice move here. Of course, we get a lower move when you get crypto selling down. So we've got Upstart. Oh my gosh, Upstart is still going. This is just the one that blows my mind. We're not at 220 yet, but still over 200. Now 206. Really impressive. It's like the undiscovered child of the group, and now everybody's super excited about Upstart. How's mRNA been? That's another one that's just been skyrocketing. Yeah, 382. You know, came off some of that euphoria, some of that intense momentum, but still doing absolutely incredible. We've got, Snowflake just getting crushed here, 9.4%. Snowflake. Somebody's asking sell puts for Snowflake. You know, if I could get Snowflake under 200, which we got in May, that would be more interesting. We were briefly under 200 in May. So let's go out here. Let's see. Sell a put. I'd get $20. Nah, not too worth it in my opinion. I'd rather see it a little lower, especially if we're gonna continue a downtrend here of people selling off some of those higher valuation ones. Build-A-Bear down to $14. That one had an incredible run. Simon Property Group, AMC, very good food company, American Airlines. Yeah, how is American? American's at 1866. I feel like that thing sat at $10 for a while in the pandemic. Where is it? American Airlines. Here it is. Yeah, it's got that slow bleed down here. Pretty typical of the recovery stocks, with the exception of Macy's. That's like the one that just holds up everything. It's incredible. Yeah, lots of variance. No kidding. All right, let's see. So let's look at Carnival, CCL. So I know they're cruising again. Yeah, they're actually up 0.21%. So what do we got here? Tourism rises as DeSantis rejects lockdowns.
That I wouldn't make. I snow skied once at age 21, and I promised
Wow.
God if I lived through getting down the side of that mountain, I'd never do it again. I've kept my promise to God. I don't do motorcycles. I don't ride even Ferris wheels and roller coasters.
So what you're saying is you want to go to Florida to hang out at the beach because it's beautiful.
But I don't mind if other people want to ride a motorcycle or get on the Ferris wheel. That's their business. I think in some ways we've got to let adults make decisions. And Stu, if I could quote from the great C.S. Lewis, the Christian philosopher.
Oops. Sorry, I
That if a
did
pair of
change that channel.
goggles can help your backhand get better.
Oh, look, VR goggles. That was just boring. I felt like I was getting lectured at. I'm sorry. Like, dude, I don't know what your talk about you skiing has to do with the market or business. And you weren't getting to the point, so I got bored. I'm sorry. Maybe that's mean. Maybe I should have been more patient. Oh, well. Leonardo up 5.08% right now. We got Alibaba, Neo, finally coming back here. I mean, look at Neo. Let's look at what sell puts are like on Neo. I wonder if how low you can get them. Let's see. If you go Jan, let's sell the... Ooh. This is interesting. Sell like the 37 put. This 37 put would give you about $5.90. That'd be like buying Neo for 30 what would that be? That's about $6. So just 31 and 10 cents. Kind of roughly at the money here. That's interesting. Let's see. Agree to buy here times 10 times 100, 37K. You get about on Neo right now. You get 16% to January. Go out to March, and what? How's it less? Oh wait, I changed this. Oh, because there's no 37. Oh, okay. Well, let's compare over here. 48.50 on Jan. 48.50 on Jan. 13%. You go out to September. It doesn't get better. No. Okay. And you could go. What if you did something shorter, like September 17th? Yeah, September. No, not heavily exciting. Tattooed Chef. What about Tattooed Chef? Let's look at this because this is a SPAC. See, sometimes with these SPACs, you get a whole lot more credit. I like credits. I want to farm some credits, some juicy money in a sideways trading market. Let's go out 56 days on the Tattooed Chef. Let's promise people we'll pay $17.50 for it. Let's sell a put. And now I'm going to get 17.5 times 100 times 10. So if I tie up $17,500, I will get a beautiful $2,150, which is about a 12.2% return by October 15th, which is less than 2 months. What is it? Was it like 57 days or something? What if I go to 15? I only get 85 cents then. Yeah, it's not as good. 20. Ooh, 20 doubles you. That gets you in at like 1590. This gets you in closer to, yeah, they all get you in around the low 15s. I mean, it's not horrible. If you wanted to own it, you can go up, especially since it's so quick. October 15th is going to be here before we know it. So that's 56 days. Got to September. September, let's see here. You go to 1750s on September. You get $1,600 for literally less than 4 weeks. Less than, I think. What is that? How many days is it? Like 27 days? Oh, it's 28 days. It's perfectly 4 weeks. Okay. For 4 weeks of agreeing to buy Tattooed Chef at $1,750, you'll get $1.60, which would work out to $1,650. This would work out to an about 9.4% return, unless, of course, it fell substantially lower. But you would get a credit for about 9.4% right away. That's interesting. I don't really want to own Tattooed Chef, but this price isn't bad. And usually it does go back to 20. In fact, the last time Tattooed Chef fell this low, I bought it at 16 and then sold it when it got to 20, because it's just sort of what it does. But it makes you wonder, what's Monday going to look like? Are we going to, or even the rest of today? I mean, right now it actually looks like maybe we are recovering again a little bit. Was that sort of our like taste of a bad market? Because like if that's all you got, it was kind of lame. Volatility back down here. Snowflake down almost 10%. Ford Motor Co. dropping 1.54%. American Airlines going back down, but no big moves here to the downside. Let's look at Dave & Buster's. Keep getting kicked off YouTube every time. Oh, sorry to hear that. Okay, play. So, Dave & Buster's up about 0.5% today. That's good. G-Tech, Tootsie Roll, Marriott. Where's Wynn? Just kept looking around at opportunities right now. At least what's on this list. So I don't think. You mean sucker rallies? Oh yeah. After the May drop, yeah. No. You're right. That's like I'm not like excited to like FOMO in or anything right now. I've barely bought anything. It's felt a little boring, but I'm just like so like on standby. But I will find something very juicy, and then as soon as I find it and I buy it, all those of you in Stocks and Psychology of Money will know right away. I'm gonna YOLO up. Patience is a virtue. I don't know why I had to say that weird. Okay. Let's see. United Air. All these guys sparklining down over here. The ones that are red are sparklining to the downside. How's Hood? Are you waiting to see Kevin loaded? Okay, so what do we got here? This is Robinhood sitting at 45. Okay. Just Dave & Buster's slightly red. JP Morgan sitting at 154. I just also still can't believe that Starbucks went back over 100 as fast as it did. But anyway, Wynn Resorts sitting at 80. $88 right now. Not 80. I wish it was 80. $88. Let's take a look at some Wynn options. See, Wynn I wouldn't mind owning. Like what if I wanted to do a 28-day contract on Wynn? I don't know. Pick something kind of relatively close to the money here. So here I'd get $5,000, but if I did 10 contracts, I'm gonna have to lock up $90,000, and I'll get $5,500 essentially for doing that. It's 5.6% for 28 days. So obviously you'd get some more at something like Tattooed or whatever. But let's take it out to March. So that would give you about $12,650. Yeah. Okay. How's SoFi? That's one that at least options wise, has been juicy. So they're up 2% today. So that always negatively affects selling puts, but not by much. Oh, wow. Well, actually, maybe 10%. So you're getting about 10% less money right now. 28 days on agreeing to buy SoFi at $15. $15, that's $15,000 that you're putting in, getting $1,600 to make that commitment, getting 10.6% as a credit for a 28-day contract. It's not bad. Looks like the market might be pricing in and kind of trying to stick around a little lower here. I mean, that's like buying it for 1340, which is where we were not that long ago. Not that long ago. We were just there. So if I go out to January, though, I'd get $3.30. You go out to April, sitting at $4, brings me down to about 11. Go to 1750. Yeah, it's about the same. Okay. Not as good as it was over the past few days, but not bad. SunPower moving up again. SunPower is another one that's rotated to the downside pretty well here. No, I mean, I don't want to say that selling puts are like a payday a few months ahead, because there are downsides, right? Because you're committing to purchase something, which, I mean, in theory, if you're going to buy something anyway, then maybe it doesn't make that much of a difference, unless, of course, it runs to the moon and you missed out on the rally because you had a sold put contract rather than shares. Now, you'll still get to participate somewhat in the rally, so your options pricing will change in your favor. But anyway, look at Cardano. It just keeps going. It keeps going and going and going. It's impressive. Very, very impressive. I'm excited about it. Golly, 257. My goodness. All right, so where are the opportunities? Where we just had all this red. I want to see opportunities. Tesla falling again here. It is still up on the day, but looks like some of that euphoria got priced in at open here, and we lost that. That euphoria just evaporated. We were like, yeah, I ain't buying your robot. I'll buy the robot. I don't think they're going to have it next year. I actually agree with CNBC. I'm not holding my breath for the robot, but I don't know. If you get like a robot that'll like steam your shirts for you and put away your clothing, that'd be pretty cool. All right. So what else? What else is news in the market? What do we got over here?
Quick check on the markets. We are in the green today. Still poised to end the week mixed for the major averages. We've got more squawk on the street on the other side of this break. The S&P is at 4427. Don't go anywhere.
Fine then. I'm going to go to Fox because I'm going to go somewhere.
Most award for network 27 times.
Oh, commercial as well. How boring. All right. I wonder if people actually like listen. I mean, I just didn't, but like, do you think anybody actually listens when the hosts are like, don't go anywhere? Like, does that actually work? Is that like a call to action that functions on TV? I don't know. I mean, they do it all the time. So I wonder if they've tested that. I mean, just by the fact that they do say it all the time, I suppose it must work. I don't know. I feel like that's like, really? Is that simple? Don't leave. Oh, okay. Anyway. See, now you know when we're trying to make jokes that there's not much news to talk about. Amazon became hedge funds' favorite just before shares tumbled. Hedge funds piled into Amazon in the second quarter, putting themselves in the front line of losses as the stay-at-home trade began to unravel. Online retailer dethroned Microsoft as the number one stock holding among hedge funds between April and June. Wow. Once all the hedgies are in a stock, it's kind of like, oh, is there more room for it to keep going? Let's see. Okay. The surge in ownership looks ill-timed now that the company has tumbled 15% from its earlier July peak and doubts about its growth. Investors hammered the online retailer following a surprising weak sales forecast. Amazon shares have fallen, blah, blah, blah. But yeah, I think it's still doing great. Let me see here. So it did have a brief run with Apple. It ran with Apple and it broke out, but it came right back. Yeah, still sitting around that 32-ish level. So yeah, look at this. So right here's look at this insane sideways trade on Amazon. Breaks out with Apple, and then it's like, nope, going back into my channel. Apple, on the other hand, has exceeded the channel, and they've been dancing just above it, which is great. Yeah, look at that. Go into a new shelf. Nice little bump up. I want to find some like juicy little stock again, like something fun. Let's see. Enphase. Ooh, Enphase up about a couple percent here. Oh yeah, the hole in the envelope thing is pretty weird. All right, so what else? Snowflake down 10%, suffering even more. Go under 200 and we'll consider you. Let's see. Square. Let's see how Square's doing. Square's at 260. Wow. Peloton's still at 209. How's Lemonade? That was one that's been falling last few days. It's a little green today. It's at 67.88. I mean, that's, I'd be curious to know what Lemonade's sell puts look like right now. I haven't even thought about that one. Let's take a look at Lemonade. Okay, if I go to $70, I get $6 for 28 days. Well, that's about. I mean, that's like 9%. 6 divided by 70. So yeah, 8.5%. Let's go to. I don't know. Let's give them a commitment to March. Ooh, $14,000 on 70 from March. Oh, that's not bad. Ooh, 20.7%. That's not bad at all. I mean, I'm probably not going to do this, but go out to January, you'd get 20,800. Let's see, January of 2023. It's about 29%. That's interesting. Yeah, I mean, I don't think I'd go that far. I'd go to like pick up a lot of the funding here by. I mean, you'd pick up $10,000 by November, $8,000 by October. November. Want to pick up 10K on 70? 10 on 70. That's 14.2% for what is that? How many days is November? Let's see. November is 91 days, 3 months. That's interesting. I still kind of want it under 60 though. Poshmark is a good one as well. Yeah, Posh has just been getting wrecked. So yeah, look at that. Straight down. It is up a little bit today, but yeah, let's take a look. I mean, if I went to November on Poshmark and I went, I don't know, let's go to $30. Little in, sell a put. I'd get $6. It'd be like buying it for 24. 6,000 divided by 30,000. 20%. 20%, and you only have to wait until November. That's not bad. See, now if you go out to February, you get $7,500. That starts compressing. Yeah, then you get 5%. What about September? $4,200 for waiting less than a month. That's not bad. Yeah, that is an interesting one. I don't know if I want to own Poshmark, though. I don't imagine you'll get good ones on NVIDIA. But wait, it's worth taking a look. $200 for NVIDIA right now. Jeez. So if I went out to same November, 91 days here, get something close to at the money, sell, options. Oops. There we go. I'd get $16.05, but I'd have to commit. This is like 16 divided by 205. Yeah, probably wouldn't sell puts on NVIDIA right now. All right. What else? So, oh wow, DD's up 10%. Nice. It's a nice movement there on DD. All of a sudden, the Chinese stocks are coming back. Now it makes you wonder if there's just this rotation of the Chinese stocks again. and now people are buying the dip on them. That's interesting. See, you go into, let's go to, where's Neo? See, I'd want to own Neo. I'm okay with that. Fallen nicely, not as far as May, but still a substantial fall. You know, we could go in here. You could just buy a call. Let's say you bought a $28. What's it going to cost you? $40. $40 call. Buy it. Cost you $1,500. It costs you $1.57 a share price. It's not horrible if you were going to do calls, unless of course the options just decay because volatility goes down. But anyway, yeah, interesting market. I'm gonna explore for some more opportunities. I will probably do the course member live stream a little bit later this morning, so stay tuned for that. I've got a commitment coming up here shortly, and but yeah, if you want to use take advantage of the Jack birthday coupon code, that is linked down below. Pricing will be going up on August 31st. Well, after August 31st. August 31st is Jack's birthday. That is of course, you know, because of all the inflation. So price is going up. You've got a free stock waiting for you at metkevin.com/public. Do that if you have not yet. And folks, I'll see you a little bit later. Thank you so much for being here. Appreciate it. And see if some news breaks today. It's been a little boring this morning, but it's always fun hanging out with you. And I think it's always good to explore and chat strategy. So again, I do the course member live stream a little bit later this morning. You know, maybe between that 9-10 area, we'll see. Maybe even 10:30. I will circle back. Thank you so much for being here.